This is our bullish count that has been breached. So we were looking at wave 1 and 2 and 1 and 2 and 3 and 4 to pull back to this wave 4 of 1 lesser degree here at the 38 at 40%, but it's dropped down to 50%. And the speed in which it's dropped down gives it that more bearish connotation, because as a corrective wave, we'd expect wave C to be on a bit of an angle, but it's got the personality of a third wave. So we have to look at it in a bearish light. So yeah, that's the end of the bullish count. Now, the only thing that I can sort of think of here is relating to the low volatility S&P 500 chart, which can have this as wave 1 to the upside here and back for wave 2. But I've been over this, and it plays out as a nice third wave here. So to put wave 1 in here and wave 2 here is a little bit of a long shot with all of this. So yeah, I don't think that's the case. But if somebody can track 5 waves from here to here rather than 3 waves, please let me know, and then I'll reinvestigate that structure. But so in the meantime, we need to, well, we've been looking, we've had our bearish count here for some time. I didn't think we were going to use it as wave B up here with 1 here and ABC back for 2. We put that in there, and then we had this down here which looked like 5 waves down, and then this has happened rather quickly through here. It does appear that we may be able to put wave 4 into place here and have wave 5 come down just below the 71 here, would be the 61.8% from this low to the high here. So that will be reasonably important. So we've got the 61.8% sitting below the 7.1 here. So we could just put this in here and expect that we'll get some support in that area there. We'll bear that in mind, but it's a bit obvious that coming down into previous lows, we're going to get support anyway there. So what we're sort of looking for, if we can imagine for a moment that this count is correct, where we have wave 1 here and 2 here, and then we'll be going down for wave 3 here. So what we normally look for, if this is correct as wave 1 here, then we would look for wave 3 to be longer than wave 1. So we could end up sort of way down here on all of this. Now, I don't know that for sure, so I don't like to go too far out in the future with, without any sort of evidence whatsoever, because this sort of follows the banking sector a little bit. And when we have a look at, I think ANZ tells quite a good story. This is ANZ on the monthly chart here. So we can clearly see that we've got 3 waves here. We've got 3 waves here for this. We don't have 5 waves here. So we're in some sort of triangle through here for this market. And when we take the balance of this here, so whoopsie-daisy, we can normally find that balance line here, which would be, just say, at the 50% here. And I'm just going to remove this here. So that's the balance line. So as a corrective pattern, this is the market's not, well, I guess what I want to say is not going to go far from the balance line now that it's found the balance line, because we've got higher lows here, and we've got lower highs here. So in some way or another, we will be staying, let's just say that we'll stay in this box here. We would be up from that lows there probably, and then would be down from, whoopsie-daisy, get rid of that, we'll be down here. I'll just take it to this second low over here. So that would be the swing range for the banks. And the ANZ's a little bit different, and they're offshore a little bit more than the others, and I don't know their full asset sheet or anything of that nature. But what I can say is that we are looking at a corrective pattern that's moving sideways in lots of 3 waves each. So it's highly likely that we're in some type of triangle pattern here. Now, with the triangle pattern here, there's things that I can do. I could put wave D over here. I could put what, you know, put here. We could be in for the E wave now. So the E wave would be the A, the B, and coming down here for this, so to speak, and then moving up at that point, you know, could be something like that. You know, that would be a conservative thing, but it does make it a little bit, the D wave a little bit small compared to this one here, and so on. So it could, you know, it could play out in a different way, but basically, in some way or another, this is a corrective pattern. Sometime in the future, we will be taking out that top here. So it's a bit like the S&P 500 market, really. You know, if we look at the S&P 500, for example, and it's, you know, it's bearish as well. Let me just bring this up for a moment and just bring it onto the weekly chart here for us a moment, because we've got to kind of tune all the markets in together in a way. Not, you know, it doesn't have to be like that. So if there was going to be if the S&P was going to be bearish, and you need to watch the video for that, but this would be the bearish count. There is another bearish count, but this would be the primary one here. So this length over here would be the same length over here for this. Now, is this going to happen? I don't know. I still got to prove that, you know. I mean, just because we've got a little move down, it doesn't mean that we have to freak out, and, you know, there's still a bullish count here. We can look at this as wave 1 to the upside and wave 2 coming back. It may or may not be the case, but let's just imagine for a moment this does come down here. So we get another leg down here that takes, you know, from December to October, you know. As they say, it's May now, so what do? Sell in May and go away or something? So you know, so we could have a 6 or 8 month correction here for this, you know, and the Feds get what they want and all those sorts of things. So yeah, so if this is the case and we're coming down for that leg here, then it would kind of make sense when we look at A and Z, wouldn't it, coming down in this leg here for for this E wave here. You know, you can see the dates along the bottom here. So to have a leg down for, you know, 6-8 months or whatever, that would be okay, but it's the bigger picture beyond that's not, it would be a buying opportunity more so than anything else, you know, because that's not 3 waves down here, you know what I mean? So yeah, that's what I think. So if this move down through here, if we take that, you know, on the XJO, for example, this market here, then this wave 1 that I've got here and wave 2 here may not be the case, you know. It might be that, because I've had a triangle pattern here before, I can't remember where I put it, but I'll have a bit of a look for it. But we may just get, you know, I suppose, yeah, it could work. It could work for wave C, yeah. That would take, like, you know, 1, 2, 3, 4, 5. That would be kind of right for that. I'm missing wave 4 here, but you know, it could be shorter up, could be longer down. So it's possible. Anyway, if we were going to short this now, then obviously you can short it, but you just have to keep the stop well away from everything. So what we've got to try to do now is we've got to try to figure out this little wave 2 over here, and we have to tie that in with other markets around the world, the Nasdaq, and, you know, the S&P, and you know, and even some of the big tech stocks. We need to put that in there as well. You know, it's a bit like I was talking about Apple with the market. So this is the monthly chart for Apple. So I know, like A and Z, I know that this here is corrective. It's bullish corrective. Now we can have this as the low for wave 4 in here. It's not too bad from this wave 4. We can have that as wave 4 there. But we can also have wave 4 over here at the 38.2%, and corrections can just get bigger here. So we can have some sort of, well, I won't go into it at the moment, but you can watch the US videos for that. But basically we can have this other leg coming down here, but it'll still be corrective, still part of this corrective pattern. That's not 5 waves in this first move here, you know. That's not 5 waves from here to here. You know, even if it was 5 waves, you know, it's not 5 waves to here, because then you could have an A, B, and C, but we don't have 5 waves up here. We have 3 waves up here. So it's corrective if it was going to pull down. If it was going to pull down here, I just want to say that, you know, we'd still be in a corrective pattern here, you know, in the bigger picture, the scheme of things, you know. So I think that's important story to tell rather than looking at the end of the world, so to speak. But obviously, you know, that's a humongous move. And of course, we need to be on it. So what we need to look for here is 1, 2, 3, 4, 5 down here. And when we get down here, we're going to see some type of ABC pattern to come back up here, you know. And this is the one that we want to catch, this third wave coming down here. This one here, you know, is going to be longer than wave 1 here, wherever wave 1 comes down to, you know. This is going to be longer. In fact, it's going to be longer than this move, should be longer than this move here. But, you know, we may end up in a triangle like ANZ, so to speak, you know, because I have counted all this in a triangle before. So anyway, it'll be good to short now, but the problem is there's a beginning and a middle and end to every trend here. We've got the top here to the bottom here. That's part of it. So you can see that we're in the later stages of it, whatever the internal count is, and we'll have a look at that, of course. But and then, yeah, so it's kind of a bit of a rock and hard place here. All I can say is that if you're going to short it at the moment, you need to keep it away from this wave 2 here. So let's just go to the 1000 tick chart here. And, well, this is our count to the upside with 1 and 2. I want to point this out to people because if you can see a different count going up here, I'd like to know about it. The A, the B, and the C wave up here. So we've had 1 and 2, and 1, 2, 3, 4, 5 for the third, the fourth, 1, 2, 3, 4, 5. So we've got an A and a B and a C. To me, that was pretty clear. But like I've made mistakes before, just like everybody else. So I'm always open for help and ideas and so on. So yeah, we've watched this. So it's pretty clear that we've, you know, this is a bit rough and ready, this structure here, but we've kind of pinned it down to an A wave or wave 1 for our bearish count. Our bullish count didn't take off, so we had this as the ABC for 2. And then I'm thinking that the wave 2 was quite big, but I've got this wave 4 here that's quite small. But I've counted this here as 1 and 2 and 1 and 2 and 3, 4, 5 for the third, the fourth, and the fifth here. And then the fourth over here didn't quite pull back up to this fourth, but still it's there as an A and a B and a C. We'll have a closer look at this trend. And then we're coming down here. So we know that the 50-60% is around the 71 here. We know 1 is the strongest number. So that's probably where it's likely to come from. If I've made a mistake here, because I think that the wave 2 here is nice and simple and sharp, and it's quite, you know, nice size compared to all of this and so on. This is a little bit small, but bigger than anything in this trend, so it's probably right. But if I have made a mistake, then wave 4 would come back over here for this. But I don't think this move down here is actually quite finished. So I think we'll be down here further when the market opens and so on. We'll see the banks go down and it'll pull it down further. But just to let you know that when it does get down here, you know, we're going to have the NASDAQ at 13,000 where it's going to find support. So then we basically, you know, this is the one that I want over here as the bearish move. Now it can pull back up to the 61.8%. It may just come back to the wave 4 of 1 lesser degree. It should be quite simple. It should be an ABC pattern. It should be 5 waves, 3 waves, and 5 waves, and we should be able to short it up here for that, you know. And then we'll just keep building in down through here for all of this. This is if you know, that was exciting. This is going to be much more exciting coming down through here. There will be some sticky points because we've got to get through the bottom here. And yeah, so that's always a bit of a sticking point. So this will probably, normally wave 3's down here somewhere, down at the previous low. So basically, you see all this consolidation here. This is kind of what we're going to get over here. So you got to kind of think to yourself, first of all, you don't want to lose money in that because that's the obvious thing to do. You make the money in the trend and you'll give it back in the correction. So the thing is that you either get down here and give all the wave 4 a wide berth, or you take most of the money off the table and you leave a bit of skin in the game to keep you connected, or you come up with another particular strategy, like leaving the stop well out of the way, you know, at that point. So there's a few things to consider with all of this. Yeah, the other thing that we need to be a little bit mindful of as well is that sometimes the markets, you know, here we're getting a nice, the wave one was really big here, right? This looks like it's almost got the extension in it, really. But it's not as long as this move here, but it's definitely got form in it, you know. It was just waiting for the rest of the market to sort of catch up, I guess. Yeah, we've just got to be careful it doesn't continue to cascade down, but I don't think that's going to be the case because there's so much support coming into this area over here. So it's the rally, it's finding this low here. So anyway, let's just move into it's 1,000 ticks, let's move into 100 ticks. So this is wave one here and ABC for wave two. This is the third wave coming down here. I've taken a few liberties here, so I may have gotten some of this wrong here and this in here, maybe that's part of 1, 2, 3, 4, 5 to here or something of that nature. So yeah, that could probably be, I need to sort of go over that in my own mind, that's the weak spot, but the rest of it is pretty much sort of okay at this point, and that brings us down to this wave four over here, where we've got wave 5 of 3 here, and then we've got an A wave here. We're going to look at all of this as an A and a B and a C for the B wave here, and then up for the C wave here to make wave 4. This here, I'll put wave 1 here, and then I'm looking at all this as a bit of a triangle pattern across here. You could put wave 1 here and simplify it, but not really getting the 5 waves down here. So, but this is the highest point here. This is the same we had on the US market. It's the same pattern. It really wonders if there's algos actually sort of running this thing. Anyway, I had a quick look at this. I might need to change it a bit. I might need to put wave 1 here and those sort of things, but basically wave 1 and 2, 1 and 2, and then 1 and 2 and 3 and 4, and then 5 down here for the third, looking for the fourth to come back to the 38.2% retracement area here. That can come back to, if that's correct, that can come back to, yeah, not far, just a little bit higher there, you know. I'll just wait for the cash to open. But I could quite easily have this wrong. But I've wanted to extend it down to the 7100 here, the 61.8%. So we still need 3, 4, 5, third, fourth, and fifth. There's still a bit more to come here. If you wanted to short this, then the closest largest number is 50 here, the 7150. So you either short the rally further back up here, or can we look at this as 1, 2, 3, 4, 5 here? I wouldn't. The cash market's going to drop it down. It's going to pull it down. So, but the short trade would be under this low here. That would be the safe short trade at that point. Okay, so I'm going to leave that at that for the moment, and we're going to have a look at CommBank. So we can, you know, I was looking for it to move back up here, but it doesn't look like the case, so I'll have to just continue with this with the A and the B here, and the 1 and the 2 and the 3 and the 4 and the 5 here. Not a very nice 5 waves here. It looks like it's in 3 waves ending. I've got this as wave 1 here with an ABC for wave 2 here. So if you're, you know, I was always sort of happy to short under the 98, if you recall. So if you do that, the stop will need to go above the top here for that. Okay, and we'll see how that plays out. But obviously these can gap. Just have a look at where ANZ opens up, and ANZ will open up and just stall. And wait for CBA, the next one alphabetically, to open, and so on until Westpac opens, and so on. And after about 15 minutes after the squeeze on the SPY, then everything will start to move. Okay, so that's that. Over to the iron ore. So we've had the golden week finish, so we can expect China to come back, and they came back here, but nothing really sort of happening here at the moment with this. We're looking for a series of wave 4s here to move down, to take us lower in here. This wave 2 may not be correct, as you know. So if I go back to the weekly chart here. Let's just so this is a possibility. You know, we can look at this as wave 1 to the upside here and coming back for wave 2. That's a real possibility. I mean, it doesn't look like it here, but on the Singapore exchange, it looks better because this wave B was down here further. So yeah, we just got to play this out here. But it's, you know, a wave 2 is simple and sharp, so it's possible. But if that level there where the 61.8% is here, this one here, where we are now, if this 720 here or 700 here becomes the resistance, I mean, that's also, that level there is the $100 mark for iron ore on the, you know, in US dollars. So it's kind of significant in its own little way. If that becomes the resistance, then we're going to open up a can of worms down here, and you might want to be thinking about moving some money out of these resources and maybe over into gold at this point, you know, because that's where everybody's going to be running to. So yeah, so well, this is what BHP and Rio and all this can do, you know. Once this 700 becomes the retested resistance, and we've this is what can happen, you know. It'll be a bit choppy around around here, but we'll sort it out a bit. Anyway, we'll look at that tomorrow a bit more. We'll be focused on this all next week. We'll be looking at this here in detail. So that means that BHP up here, as we've mentioned before, we can have this here as the A wave here, and the B wave over here with an A, B, C here, and then coming down to the C wave here. That's the issue at this point with this. From the bottom to the top, this box is the 50-60% retracement level. It may find support, you know, in that space. That's all doable. But still, it's come down a lot. And, you know, if I had this as the A, the B, and the C here, I would have been happy with that. But this has breached this low here, so it actually opens up a bigger can of worms, and that's why I've got it as 1 and 2 and 1 and 2 here. So it's, you know, highly likely that it's going to come down further. Now, it's not going to come down quickly because there's a lot of support here and all of those sort of things, but it should continue to edge down lower. We're seeing crude oil move down lower as well. Not that that's a fantastic indicator of the economy at the moment because of the Ukraine-Russia environment. But yeah. So Rio also too, we've got wave A over here with an A and a B and a C for this over here. It can be wave 1 here and wave 2 here. It just doesn't look like a wave 2 in here for me. It should be a 5-3-5 structure, and it's not really giving me that. So it's just giving something else. So look, it's gonna stall here, but just understand that, you know, we can end up down at 80 here, you know, if not lower. These will be a series of 1s and 2s in here, so the third wave really hasn't sort of played out here yet, but it will do it in small increments because of the 100 here. That will slow it down, and coming into the previous low and all those sort of things, you know, there'll be supports everywhere for this in different ways. Not that it really matters anyway, you know, at this point. You can use trend lines anyway. You can get creative with trend lines. I mean, it's a funny old world. But yeah, so down, and the same with this Fortescue as well. We can look at it as wave 2 coming back here, but this is not telling me it's a wave 2, you know. So it's a real bit problematic. Just be prepared that, you know, there is a case for further downside for these. And this would be a series of 1 and 2 and 1 and 2 and so on here. This is a wave 4 here, possible, but it's just such a long shot. I mean, the only thing sort of holding these up is a weaker US dollar. That will come into play as well. I mean, I'd like to look at this as being corrective as an A, B, C here for the A wave, some type of B wave here. I mean, the other way to look at this, I guess, is to put this here and this over here, because you can kind of get 5 waves out of this. So that could be the case over here for this, you know. Either C or 1 over here for this, that's possible. But it wouldn't put it in the right timing with the others, you know. That's the problem with it. This is 1, 2, 3, some sort of 4th here and 5th here. So I've got to put that there. But yeah, it's, you know, if once this, yeah, this is, it's not in a good position at this point. Okay, so gold has pushed up as the US dollar has pushed down, and just the fact that the rates are going up and all of the rest of it. So we were looking for wave 2 over here for this as an A wave and then a B wave over here. And we can still put the B wave here, by the way, and we can still look at this as a C wave here and still going up. We know gold's bullish. That's not the real issue. And as I mentioned before, it's better to buy stock than these markets, because than having leverage, buying leverage. It's okay if you're trading futures contracts, because you're not paying for the margin, but you are exposed to limit moves on those exchanges, which is not a good thing for unexperienced traders. So if I had to counter bullish, then we'd have to look at this as 1 here with an A and a B and a C for wave 2, then 1 and 2, and then 1 and 2, and then 1 and 2, and 3, 4, and then going up for 5 here for this. So we'd have to put this wave 3 up here now, and this wave 5 up here on top there, this wave 3 here. Then we'll need a wave 4, so I'll just borrow this here. That will pull back 38.2%. So we just got to figure out if this is going to be a B wave or we're going to be trending higher. Because if we're trending higher here, I mean, I'll have to relabel this a little bit, but basically, if we were trending higher, this distance here as wave 1 here, we would need to see that here. So we'd need to be looking at wave 3 at minimum here, at minimum, you know, that's at minimum. So that means that we would have to probably, you know, look at this. We'll probably put this wave 3 here, really, you know, and then this wave 4 here. And can I grab that there? It's not really, no, I got it. This wave, it'd be something like this here, up at the 2, 3. So we look at this here as group 1 here, and that top of group 1 would be there as wave 3 there. But it'd be something like that. So we'll have to stretch all of this out a bit further. Yeah, so that's where we are. But it can be a B wave here. We'll see if the US dollar bounces off its current lows. But it does look bearish. The US dollar does look bearish. So that means that this can push up here. So it's more likely an impulse wave rather than wave B. This would be kind of secondary now, this situation, because of the way that the dollar's dropped quickly over the last couple of sessions. Okay, that said, just have a look at silver while we're here. So silver's pushed up here as well. I mean, I think yesterday we looked at this as an A and a B and a C here. You could probably put this as wave 2 here now too, I guess. But this should just continue. This is a nice wave 1 here. So this is another little wave 1 and 2 and 3. So we're going to see this continue to the upside here. Just to let you know that. So this is likely. I'll remove this here. This is kind of unlikely, and we should see this push up I'll change these, the labeling here. I need to change them back a little bit. I need to extend the blue 5 waves up further here with all of this. But yeah, so that's that. So we're over to Newcrest, so we'll see a jump in Newcrest. We wanted to see the arrival, the reaction, the first high above the level. They can come up higher to 33 and can go above 33, by the way, as well. But we should see some type of correction across here in its own way. So today we'll see this, up here somewhere or something or other. But yeah, nothing wrong with owning gold stocks at the moment. And this is Northern Star here. So we've been playing with this wave 4. Haven't really paid too much attention to it because it's all a little bit awkward here for wave 4, but the 38.2 came in. We had a bit of a pop here yesterday, so we'll probably get another gap here today in that kind of thing, you know what I mean? So we'll be up around the 15 here. But this is the other point here too, is that we've got wave 1, 2, 3, 4 and 5 up here, so we can have a correction up here. Put this wave 5 up here somewhere, and then we should have some sort of like Newcrest Mining, we should have some sort of A, B and C wave back again. I mean, if I've made a mistake, then I would look at this. I mean, it's quite a nice 1, 2, 3, 4, 5, to be honest. Everything's pretty perfect about it. It's got the right look and feel about it. The only other thing that I could think of is that we're going into a bigger third wave or something, so this would all be from this point to this point would be wave 1, and we come back for a smaller wave 2, and then we push up into 3, 4, 5 and push up higher at that point. But technically, if we took this low here and took it up to say $16, $16.50, it's normally somewhere in there, then technically it can come back to the 50-60%. Now, it's always hard to think, well, how can that be, Pete? How's that possible, when but things change and things happen, and they're the markets, and you can never be too sure about things, but that would be the starting point at this point. But the top of the wave 3 here and the wave 4 here would give it very nice support as well. So that would be a little bit more logical coming back in that point, But at the same time, we've got to kind of think too that, this correction here corrected this trend. So it's kind of rebalanced. And then this one here corrects this one. So it's rebalanced. And this one here hasn't been rebalanced yet. But at the same time, it needs to take on the whole fractal as well. It's all the same family. So it's got to rebalance this, and it's got to rebalance any leftover balancing it needs to do on this one with this fractal. So it can come back down here, but we'll see how the cookie crumbles with this. So yeah. Okay, so that's for gold. All good on the gold front. That's where the money should be parked. The Australian dollar here. We've been looking at wave 3 here with an A, B, C, D, and E here for wave 4, and then moving down for wave 5. So look, I think it's not tradable as such. I mean, of course, trading intraday on it's different. Intraday trading is another world. It doesn't really matter about too much, but yeah, we're seeing the US dollar go down, but we also know that this is a corrective pattern here. Well, I suppose we could look at it as wave 1 up here with an ABC back here, as 1 and 2, but it doesn't count very nicely in that case, So, yeah, US dollar is going down further. The Australian dollar needs to go down with it. So they'll be sort of pushing and pulling off each other to make that happen. Yeah, so that's that. And we're going to have a look at the metals. So let's just go over to the metals, and we're going to put this on the daily chart, and we're going to have a look at copper, which held up reasonably well last night. It's a little bit flat. It's nothing there. So we're expecting it to have one more little move down here. But we also yesterday started to label this as 1 and 2 here, didn't we? So we'll just see how this particular last little leg goes down here. So I still want it to make another little low here. And obviously it will have a bounce off that. So when it does come down here, it's going to bounce off that in some way or another. How high it goes is another story. But anything below that then it becomes bearish at that point, you know. So copper could be turning bearish, but it's not confirmed, but it's getting close. Nickel, just looking pretty stable, just pretty much not doing anything at this particular point. We're looking at possibly being bullish to the upside here, having another leg to the upside. We'll see how that sort of plays out. We still don't know anything yet with this, but yeah, I mean, coming down here further would be in line. You know, I mean, we've had this as a bearish count for quite some time, and it would pull into line what's happening, you know, with pretty much green kind of, you know, we're seeing end phase. You know, it's got nothing to do with nickel or anything like that, but it's part of the new world, the new green world, so to speak. And, you know, nickel and lithium and a handful of other as well, they, you know, they're the supply for a lot of these end products, you know. So if this is not in demand, then those other products are not going to be in demand. That's how I sort of see it, you know. Okay, and then we'll go over to, where are we here, to lithium, and these two just came back yesterday, but they didn't really do much, so, you know, they're not there yet. So this is Pilbara here is kind of interesting, because we talked about this as being the A, the B, and the C here for wave 4, but we need to clarify that. So currently up here, we can look at this as an A wave, a B wave, and then 1, 2, 3, 4, 5 finishing. So a move across the top here would be kind of helpful for a more bullish view on that. If that doesn't happen and starts to move down too much and starts to take previous lows out, then we've got a bit of a problem at that point, you know. So we'll just see how this goes, if this can hold up here. We know Liontown here is sort of, it's got further upside to go, as I say. I just don't know if it's going to pop to 3 or drop to 4 before going higher. But yeah, so that's where that is. Let's just check on a couple of these, because we were looking at their patterns, weren't we? So this was one particular pattern that we had. This one here was quite sort of common in the markets. That looks corrective here, so that tells me this low is going to be breached here. This also looks corrective to the upside. This also looks bearish to the downside here. So it looks like I'm getting 5 waves down here. So if this low here is breached, then I suppose you could look at this as wave 1 with an ABC back for wave 2, but it's really sort of skimming it at that point, you know. But definitely a break of this one here, and then it's all over for that. And the Australian one has got the same sort of pattern, and yeah, so if we look at it with this, because we could look at this as wave 1 here with an ABC, to be fair, but if this is taken out here, then that's an issue at that point. So if that's taken out, then we're going to see this, you know, move lower at that point. So it's kind of holding there, but I mean, it looks like a triangle, doesn't it? You know what I mean? And if it is a triangle, if this is wave 1 and 2 and 3 here, for example, and this is some sort of, you know, A, B, C, D, E here for this, well, then when we come down here, it's not really going to be like that. It's more going to be like, if I can just clear these up here. If this is going to be 1, 2, 3, 4, and 5 here, because it will just, the length of this one here is normally the length of this next leg here. So it would be something like this, and it'll also be that this be the 5th wave here, so it'll be the same length as wave 1 here. So between wave 1 and the rise of the A wave here, and yada yada yada, that will be about here somewhere, say down into the 72 here. 72 is always a nice number. Then we would have an A wave, B wave, and C wave, and then we'll go down at that point. So it would play out like something like that if it was going to be bearish, you know. Okay, I'm going to leave it all at that. Thanks for tuning in. Cheers.